Everyone, welcome to the market snapshots for today. So, like I have been saying, that why we shouldn't be having an exposure of 100%. I think yesterday was a good day to to just have a look what happened in the markets. And if you remember, somehow looking at the US charts, I was like these charts are very strong in isolation, but somehow the data points were not supporting the rise, and that is the reason we saw like some very strong falls in the US market. Nifty 50 closed at 24,154 yesterday. Nifty 500 23,472. Nasdaq was down by almost 1.7% at 29,490 and S&P at 7691. So the advances in Nifty 500 were 192 declines of 310. Those are poor numbers, and new highs 8 against 492 new lows. The breadth is deteriorating. So the difference which I see between Indian markets and the US markets at this point of time, I think the US markets have been volatile, and that is what they have, that is how they have remained for almost like 2 to 3 months now. Indian markets, on the contrary, they are working very much like slow poison. So if I look at the breadth of Indian markets and the US markets in last week, both might have fallen equally. But if I look in isolation, the Indian breadth would look better than the US markets. The reason being these fall happens very gradually, whereas just because of the volatility is so high in the US market, that's very rapid. And that is the reason I have been saying, see, if you're looking only at indexes, mostly you'll be struggling. I mean, your breakouts might not be working, your stop losses are getting hit almost every time. There are very good thematic or sectoral plays which are happening in the Indian market or the US market. But if you are looking into indexes in isolation, mostly you'll be struggling. The breadth for Nifty 500 above 20 EMA 236 stocks, it is deteriorating. Above 50 EMA 273 stocks, and above 200 EMA 288 stocks. This is Nifty 50. Just look what has happened. I mean, this clearly shows, I mean, the strength is not with the large caps for sure. I mean, just look at it. It took how much? One, two, three, four, five, six, 7 sessions, and I mean, almost a rallied for 1500 odd points. And maybe in same 8 to 10 sessions, it has given more than 60-70% of it. So that is the reason I am telling the charts in isolation don't tell you the entire story. I mean, you will have to, at this point of time, there is a lot of money made in Indian markets through equities, but I think it is very thematic and sectoral. If you're looking at broader indices, maybe you might be struggling big time. So just have a look there. Nifty 500, it is trying to replicate to Nifty 50. The difference is this chart still looks stronger, because if you see this, I mean, this 50 MA is rising, and the fall, I mean, it is yet to close below 50 MA. Mostly how I look at it, a pullback will happen and this will rise, because broadly, like I said, there are a lot of thematic and sectoral plays which are playing very beautifully in the Indian markets as well as in the US market. So mostly this will get a pullback. That is how I look at it. So overall sentiments in the Indian markets, the large caps Nifty 50 is bearish, participation is weak, and the breadth is mixed. I think it will be a matter of time, it will become weak as well. Nifty 500 bullish, and participation is weak and breadth is mixed. This is where my hope is, and not hope, I think most probably this will play, because there are very good opportunities in the Indian market, provided you have that eye. I mean, if you're looking things into, like, I mean, with random perspective, mostly it will not work. But then if you can just get down to most of those thematic plays or sectoral plays, it might be helpful to you. Coming to the US markets, this is S&P 500 227 advances to 73 declines, and new highs 10 to new lows of 490. And the breadth is deteriorating, a sign of worry for sure. Above 20 EMA 271 stocks, above 50 EMA 304 stocks, above 200 EMA 338 stocks. the markets are very, very volatile, and like I have been saying, there are other factors too which are playing for the US markets. It's not only the equity market in isolation, the yields, the dollar, nothing seems to be helping, at least in my perspective. Nasdaq, I mean, like I said, I mean, I think this is where I said somewhere here, this chart is very, very strong. There's nothing wrong about this chart, but somehow, the rise was not supported by the data, at least some of the data points which I capture. One of the very crucial data points which I capture is I look at equities market wherein, I check the follow throughs. For instance, if 10 stocks made a new high in 30 days, how many of those of that same universe made a new high in the last week? If that is not happening, basically it tells me there is no consistent buying in the markets. Maybe, people are trading, but it is not that people see a lot of strength in those scripts and they're putting more and more money, more not more institutional money is flowing in, and somehow that has been deteriorating like extremely badly for the US market. I mean, Indian market, I think it is still very sustainable there, that data point, but for the US markets, I think it is deteriorating. Like, I think this entire, I mean, this is Wednesday, from Friday to Tuesday, I think the max repetition is happening across universes around six stocks, which is very, very low. And that is the reason, at the same time, like I have been saying, the US yields and the dollar also is not helping the US markets. Same is the case with S&P 500. I would still say, uh, to me, this still remains the stronger bet in the US markets, compared to Nasdaq 100 or Russell 2000. But like I said, even here I'll be cautious. It is no more a complete green signal to me. I'll just look at some of the sectors which are playing well, and that is how I would like to play. And Russell 2000, I think it is deteriorating a lot in terms of chart, in terms of data points. So overall sentiments in the US market, Nasdaq 100 is still bullish, participation is mixed and breadth is mixed. S&P 500 bullish, participation mixed and breadth is mixed. Russell 2000 bullish, participation is weak and breadth is mixed. From the US market perspective, I will say it again, be very, very cautious. Somehow everything is rising, the yields are rising, the dollar is rising, the equities are rising. The follow throughs are not happening. So basically, I mean, for me, it is time to be alert in the US market. That simply means I'm not booking profits. It is just that I'll follow my stop losses for wherever my entries are. And in case of new entrant, uh, maybe a 50% exposure is at the max, which I'll be looking at, nothing more than that. These are some of the indicators which I follow, and I think I mean, they really support the equities market. I mean, if I just look at charts in equities, maybe, if I just combine the equity charts with these few indicators, I think they help me a lot to, to understand where the market is headed. And like I have been saying, the rise in US yields is not helping the equities for sure. Dollar somehow has deteriorated, and that is the reason maybe, whatever rise we saw in last few weeks was because of this. VIX at 1584, I am not convinced with that kind of volatility. I think the market is higher, more volatile than a 1584, which is indicated by the VIX. I think Bitcoin is basing. You might see a good opportunities there, whether it will be towards long or short, I cannot tell you that. And gold at 4359, I think provides you excellent opportunities, both short term and long term. Mm, I think my dollar chart is not loading. I mean, anyways, the dollar chart, uh, what was available in dollar chart was, it is still going down, and maybe that is, it just came back. So I think this is majorly the rise, which whatever rise we see is because of this. I guess dollar has fallen. This is what is helping the rise in the equities market. And like I said, Bitcoin is basing around these levels, right? I mean, see, whether it will break down, I don't know, but I would play on the both the sides. How maybe I would just draw resistance lines here somewhere, and if it breaks out, maybe I would try to take a bet. I would draw support line here. If it breaks down here, maybe I'll try to short it out. Anyways, I think Bitcoin is giving you good opportunities short term, so maybe you can consider that as well. And gold is a strong looking chart. I mean, uh, again, from this basing, it had given a breakout. It is now trying to sustain to its highest level, whatever it made. And if you see, the 50 MA has also, taken a positive trend. So most probably this should too play out. A very good opportunities, long term, short term. Just keep playing your bets. So overall, my takeaway from today's session would be, for the US markets, I think you should remain very cautious because the markets are volatile, and there are good opportunities sectorally. Maybe you can look into financials, health. I mean, these are the sectors I think which I have been telling from last 4 or 5 weeks now, because this is where a lot of liquidation happened while last time Nasdaq had peaked. So mostly, if that is where the money has moved, mostly they will continue to rise, and that is the reason we still see strengths in those sectors. Same is the case with Indian markets. If you look at the indexes, I think they are not doing very well. The breadth keeps deteriorating, but there are very good sectoral plays, thematic plays where you can, utilize. It's just that you'll have to scout a little bit. In terms of US yields, I think that is where the major concern is, because of which the US markets remain volatile, because somehow dollar has become little supportive by going down. And I think good opportunities in both gold and Bitcoin in terms of like short-term opportunities. With regards to Bitcoin, I think good opportunities short-term, and with regards to gold, I think very good opportunities both short-term and long-term. That's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.